Welcome back, tea traders. Wall Street investors felt on the top of the world yesterday because inflation in the United States is to the lowest level in almost 2 years. Nevertheless, the benchmark stock indexes had to reverse their trajectory. The US dollar also opened lower today, and today the crypto market has entered a new historic era. We will give you an insight into this and other news in this video. You're watching a recap of the New York pre-market on April 13 with me, Kate Stikhina. The culprit for a sharp trend reversal in the United States stock indexes was the minutes of the Federal Reserve. Investors discovered a few alarming signals in the minutes of the last policy meeting. For a start, some policymakers voiced concern about the fallout from the bank crisis, and they supposed that a crash of two regional banks could entail recession in the United States by the end of 2023. Besides, the document exposed the regulators' intention to go ahead with the rate hikes to curb inflation despite all headwinds, including the obscure economic outlook. Today, Fed funds futures indicate a 66% chance of a rate hike by 25 basis points at the nearest policy meeting. Such prospects pushed the major stock indexes down yesterday. As a result, the S&P 500 sank by 0.41% intraday. All 11 sectors tracked by the index closed in the red. The consumer sector and the telecom sector incurred the heaviest losses. At the same time, the losses were mitigated by energy and commodity companies, whose shares closed with minor gains. However, all futures on the three stock indexes logged a 0.1% downtick in the pre-market. The S&P 500 is trading at about 4,090 points. Remarkably, even the US dollar retreated this week in the face of a looming recession in the top global economy. Following a sell-off on a Wednesday, the US dollar index tumbled to 101.30 today. Awaiting a new portion of statistics, the greenback entered a consolidation phase inside the downward channel between 101.20 and 101.60 against a basket of 6 major currencies. New York Fed President John Williams said on Monday that the central bank switched its policy into sufficiently restrictive territory. From now on, the regulator will keep close tab on retail sales, CPIs, and other metrics. Investors are also closely monitoring such metrics and selling the US dollar in a parallel. The economic data which is due today is likely to drag the US dollar down even lower. In response to the fresh data, the US dollar index skidded lower to 101 points. The report on the US factory inflation showed that producer prices dropped by 0.5% in March from a month ago. In February, the PPI was flat, and thus producer prices fell to a record low since April 2020. The annual rate of factory inflation declined to 2.7% last month, and the lowest level since January 2021. On the top of that, the core PPI also decreased by 0.3% on months. All in all, the stock market cheered the positive dynamic in factory inflation and neglected a small growth in the weekly first-time unemployment claims to 239,000 last week from 234,000 a week ago. While the US dollar is on the defensive, trying to deal with the selling pressure, the Canadian dollar found the catalyst for growth in oil prices. The US benchmark rate, WTI, jumped by more than 4% in the last two sessions and reached the highest level in almost 5 months. Oil prices are trading higher on the back of the signs of a shrinking global crude inventories. The commodity-reliant loonie is gaining ground in zinc. The red-hot inflation data in the United States summons expectations that the Federal Reserve will hit a pause button in the cycle of rate hikes. The Canadian dollar has been advancing for 4 days straight, and the loonie is expected to print new highs. Today, the USD CAD pair passed 1.3406, an 8-week low, and went lower. The weak greenback is not able to assert itself against the Canadian rival, so the USD CAD pair is trading lower within the corridor between 1.3388 and 1.3448. Bitcoin is taking advantage of the US dollar's weakness. Earlier today, the flagship crypto topped out the round level of 30,000 and it's the landmark level for the token in 2021 and in the first half of 2022. For a long time, this level has acted as a threshold of trading interests. Hence, it's important to leave 30,000 behind, and the trading channel is shifting higher from support at $29,864 toward resistance at $30,347. Bitcoin has gained 1% overnight, currently trading at the highest price since June 2022. Apart from its response to the US economic data, the token owes its rally to another crucial event. The Ethereum platform has gone through the long-awaited Shanghai upgrade, and this historic event for the whole crypto industry took place at night from Wednesday to Thursday, and the upgrade, also known as Capella, combines two basic modifications, Shanghai and Capella. The overhaul in the Ethereum network opens a new era for all crypto tokens. From now on, a digital currency could serve as a reliable investment asset. Check InstaForex TV channel for up-to-date news and analytics. Make profits with the InstaForex and see you online tomorrow.